Hi everybody, this is Property with Leonard and welcome to another episode. Now on this channel we discuss property, finance and investments. Now please note that none of my videos constitutes as financial advice, but if you're looking for financial advice, please speak to an accredited and registered financial advisor. Now everybody is always looking for a bargain and purchasing a fixer-upper. It can be an extremely financially beneficial endeavor. However, doing your groundwork or proper research is even more important when you as a purchaser is considering a home that would be regarded as a fixer-upper, because there will be for sure far more expenses in addition to the initial purchase price. I know it's pretty obvious, but it's important for you to know that. This is the type of video that you would want to watch more than once. So that's the one thing. Secondly, can I kindly ask you, if you haven't, to please subscribe to my channel, to like this video, to share it, and leave me a comment in the comment section below. I always like going through the comments, responding to them, and that way we get to know each other. So here goes. And in the words of one of our infamous presidents, who said, listen properly. So this is one of those videos that you need to listen properly. An investor makes their money on a property purchase. That is when they buy and not when they sell. Because the success of the investment is based on the decisions made at the beginning of the transaction. It's all about a principle here. Many of you eat out on a regular basis. And if you'd be honest when I ask you to tell me in the comment section below when and not why, when, not if, when do you tip your waiter? When do you tip your waiter? Type in the comment section below. I'm waiting. You can type there. I'm waiting. And yes, you're right. At the end, of course, you would say, Leonard, but it's obvious. I tip my waiter like everybody else. When we finish, we're about to leave, we got the bill. Well, let me tell you that that's wrong. Or let me rephrase, it's not wise. You know why? Because I always let the waiter know that I intend to tip them. I sometimes even go as far as telling the waiter how much I am willing to tip them. Because your waiter, and just think about it, your waiter don't know if he or she will get a tip from you. They don't know. So chances are you would be treated, meaning his attitude towards you, whether subliminal or not, would be based on his or her prior experience. And by prior experience, I mean the patrons, the customers, the waiters served just before you. Perhaps they were rude or just plain difficult or unkind or they were just okay. But none of them, the common denominator here is, none of those previous clients or customers, none of them tipped the waiter. So in the waiter's mind, you and your company, you are exactly the same. And in the waiter's mind, there is a high probability that you won't tip him either. But what the waiter don't know is that people like you and me, we are same. We always tip our waiter because perhaps we've been waiters or we believe it to be etiquette to tip. And when you tip your waiter upon finishing your meal, I know this is a mouthful, but just bear with me. When you tip your waiter upon finishing your meal, the question is, who will benefit from that tip, that gesture? Who? Of course the waiter will, and most certainly the next customer. They will benefit from it because you have just uplifted that waiter's spirit. You've just made their day and you got okay service. But the next customer, the next client, they will get great service from the very same waiter. Think about that. Now let me not get too carried away here. It's all started by me sharing with you that an investor makes their money on a property purchase when they buy and not when they sell. Because the success of the investment is based on the decision made at the beginning of the transaction. But what I'm trying to get to is you to understand the principle here. So the question is buying a fixer-upper property worthwhile? They say if it seems too good to be true, it probably is. But on the flip side, it's not all doom and gloom. There are good investment opportunities out there. And if you as the buyer has taken the time to do your research and follow the right procedures to ensure that you are making a sound investment decision, it can work. And that is what this video is all about. So irrespective of which type of buyer or what your intention is with the property, it is imperative that certain principles are adhered to. So as to ensure that you're not just protecting yourself against purchasing a potentially, money trap. And trust me, you want to avoid that at all costs. Now, most buyers, they prefer to purchase a property that is well maintained, well looked after, in move-in condition. They don't want to do anything to the house. In fact, I've had numerous clients in the past who insisted they don't want to do anything. I mean, some repairs would not have cost them a lot to fix, and they could have purchased the property at a reduced price, but they just refused. And I'm not talking big things here. Now, what I'm saying, and I say this respectfully, if you view a property and there are a lot of things broken or missing or need fixing, don't you think that tells you something? So why don't you just make an offer on the property? It's your prerogative, but I'm just giving you advice here. Why don't you just make an offer on the property and fix it yourself? You insisting on having the kitchen doors fixed or replaced. Ask yourself or think about it. How is the current owner going to fix it? Put yourself in his or her position. Think about it. You are selling a home. You're not going to live there anymore. So even though the seller would fix it, for most, the quality of workmanship, it won't be up to standard. It won't be high on his or her agenda. They just want to fix it. They just want to make you happy. And I know I'm generalizing here, which might not be fair, but you catch my drift. You understand what I'm saying. Perhaps the seller don't have any financial means to fix it. Because why didn't they fix it for themselves? Think about that. They are living in the house anyway. They were living in the house, so why didn't they fix it? So read between the lines, or do I really need to spell it out for you? Rather, just make an offer. That is my advice to you. And you are planning to renovate the kitchen anyway. So that's the one side of the coin. If you are buying a fixer-upper to be used as your primary residence. And on the other side, if you as an investment, and as I mentioned before, doing your groundwork, your homework is even more important. If you're buying it as a fixer-upper, you're going to fix it and sell it. Your sole purpose is to fix and sell it and make a profit, because to you there will be far more expenses than just the purchase price. A lot of additional money will be spent on fixing up and renovating the home. So you as a fixer-upper investor, you need to be savvy and know when the purchase is worth the while and when you should just walk away. Because discerning between a home with potential and what to steer clear of, that is key. Your ability to discern between the two is a key element if you are investing in this fixer-upper property. Upgrading or repairing cosmetic issues is one thing. But major repairs to the structure or the foundation of the home, it will severely eat into any potential return on your investment. There are numerous reasons that draw investors to fixer-upper homes. And a big draw card is that fixer-upper homes often sell for far less than other homes in the same neighborhood. Which means that if you as the buyer have the capital to spend on renovating the property, you could secure a higher profit margin when you sell. And obviously this is dependent on how savvy you as the investor is with your money when renovating the home. And a good investor would be aware of its potential, fully aware of its potential. And in my opinion, there are three major points to consider. This is now you as an investor investing in a fixer-upper property with the sole intention to fix it and sell it. And the first one is the home's layout. Now, it is far easier and far less expensive to renovate a home as it stands than change the layout of the home completely. Ideally, the shell of the home should be well designed and laid out correctly. And by this I mean you as the investor, if your intention is to add more rooms, it's important that the current layout of the property allows for that, and to ensure that there is not a disconnect in the flow of the design. In certain instances, once again, it might just be better for you as the buyer, the investor, to walk away than to try to correct a poorly thought out floor plan. And secondly is location. Now this is arguably the most important one. Now, location is a key factor. The location of the property, it will most definitely have a greater impact on its investment potential than any other factor. Where the home is situated will firstly determine its current value as well as its potential future growth, which is why it should be a primary focus to you as an investor when deciding whether a home is a good investment or not. There are several factors that determine whether a location is considered to be preferable, such as, these are obvious things, but let me just mention it to you. Its proximity to a range of amenities, and these would include shopping centers, recreational facilities, transport, entertainment areas, good schools, of course, just to name a few. And lastly is serious defects. Now, this one is so important because it can make or break this deal. Now, the possibility of serious latent defects are some of the reasons why there are far less competition in the market for fixer-uppers. A lower demand for these homes is one of the reasons that they will sell for a lower price than other homes in the same area. Now, that goes without saying. I'm saying it because it is important for you as the investor to assess the structural integrity of the home before you purchase it. Although most defects are repairable, structural damages will be very expensive to fix. And if you are not an expert, if you're not a builder or structural engineer, you need to get expert advice and opinion before making that purchase. And when it comes to the potential of the property, you need to guard against overcapitalizing in the property. And for that, get the experts, get an estate agent, somebody who specializes in the area to give you an indication of prices, because you don't want to be the most expensive home and price yourself far above the average price in the specific area. And I sincerely hope that's it, me once again for this episode. And I sincerely hope that it was of value to you. And if this episode was of value to you, can I kindly ask you, if you haven't, to please subscribe to my channel, to like this video, to share it, and leave me a comment in the comment section below. Thank you so much, everybody. I'll see you in the next episode. Stay blessed.